Germany has rejected Greece's request for a 6-month extension on its loan agreement. Dylan Bester, he's the head of private sales at Saxo Capital Markets. He joins us to discuss this. So we know there's an emergency meeting that's taking place today, but there's an amount that's been quoted that Greece needs to meet in terms of its obligations. 595 million euros of bond interests. Can they meet this commitment?
Well, in that instance, it's a warrior of two worlds instance. Basically, what you're going to be looking at is, are they going to get emergency funding before then, or are they going to look at trying to drag that out? The commitments will have to be honoured. It's just a case of speaking to their bondholders and seeing if they can extend that and try and come to an emergency plan before the end of this month. So just extending it for over a month, but it's essentially going to be a bit of an extension from next week.
But it's just putting off the evil day, isn't it? I mean, you've got, they had, it was announced earlier this week, a 2-week extension. And Germany's saying, we're not going to give you 6 months as you're asking for, no chance. And the same with the, maybe you talk to the people you owe the money to and you get a week or two. But the problem is too big and it's not going to go away. So what's going to happen when these little extensions run out?
Well, inevitable, you're going to have to get the inevitable happening. So you've got to go look at, I mean, what the Greek finance minister is suggesting is actually trying to get this all sorted out. They are looking for the bailout at the moment, but essentially it's going to run out. So I would say they have to look at a final plan to get this all sorted out, but it's going to have to, it's looking more and more like a default.
Dylan, there's been just a different commentary that we're seeing in terms of reports. So maybe for us just to get some clarity, the submission that was made by Greece yesterday, did they request a 6-month assistance package as opposed to the extension of a bailout? What's the difference between the two? And is this what really happened, just an assistance package versus a bailout extension?
Well, on the assistance package, what they're looking for is a bit of funding just over this next few months to get through. In my view, that's not likely what they need. They need something larger than that, and they need a bailout package. In order on that, I mean, the assistance package will provide a bit more time, but as we commented earlier, it's inevitable that's going to happen, and they need to sort this out now. So they'll have to look at a bailout program. But if come the end of the month they haven't decided on a figure, and they haven't been able to secure a bailout program, they'll have to look at a default or possibly more funding from the IMF or the ECB.
So when you're looking, Dylan, at the work you do every day, you're now saying you have to do scenarios. So let's say, what if Greece defaults? What if it leaves the euro? And how does that affect how you do things? I mean, it's not just of academic interest. You must have calculated there are going to be particular consequences on Europe and therefore on other markets, but to what extent and where? And therefore, how do you modify your approach? So what are your scenarios and what kind of thinking are you doing about them?
Okay, on that you'll have an orderly exit where they will basically, they'll come and say, we will be leaving the Eurozone economy, and the Greek Parliament will decide on that. And that's an orderly exit, and then they'll have to move to their own currency framework. From that, to boost their economy again, they'll have to get into trade within the European economy. So their currency that they adopt on that time will have to devalue by at least 15% in order for them to be competitive in the European space and start generating new GDP going forward. So that's effectively an orderly exit. An unorderly exit would be where they don't get an extension and they basically need to, they don't get any bailout program and they need a default. Yeah. That credit default could essentially spread throughout Europe. At the moment, you're looking at the ECB and the IMF that have funded the previous bailout in 2012. That's going to be the large component of why they could get an extra bailout, because you're looking at the large institutions that support the whole European economy. So for the ECB, you basically, they need to come together with a package for an unorderly exit. So they wouldn't want to basically make it go forward in terms of an exit that's not planned, because it would be catastrophic for Greece as a nation and the Greek banking system. So if they default, it's going to go through to the whole ECB, and effectively it could cause a domino effect through the whole European economy. I mean, you could see the other nations that also, I mean, their debt to GDP ratios are also above 100%. You're looking at Portugal, Italy, Spain, and Ireland. So those are all above 100%. So there will be knock-on effects, and you could see those nations applying soon to get further bailout just so that they can cope with their obligations. And on that note, I mean, if you're looking at the the current bond interest facility that Greece is honouring, there is no interest on any of their loans. So they don't pay any interest. Come 6 or 7 years' time down the line, when they have to honour interest, given the global outlook, where there could be growth, and say the IMF and the ECB are looking at extending the interest rates, they will be demanding extra interest in terms of those obligations that Greece are trying to honour. So 6 or 7 years down the line, when they have to pay more interest up, there's going to be a lot more problems.
Will we see capital controls being imposed on Greek banks?
I would assume so, yes. I would say there would have to be, because there's going to be a complete capital flee if something does go wrong, and that's going to cause a lot more devastation for Greece.
Thanks so much. That was Dylan Bester. He's the head of private sales at Saxo Capital Markets.